Hello traders, the title of the video is Cup and Handle Chart Pattern Trader explain his cup and handle chart pattern analysis. Alright, we are recording this video today because a YouTuber of the name NevMCC did ask me on my George Trio YouTube channel, alright, is this too long for a reliable signal? The question was relating to the cup and handle chart pattern. It is too long for a reliable trending signal. So you can see that the cup and handle chart pattern took a bit of time to be formed. This is very, very good. In fact, if it takes so long before the cup and handle chart pattern is formed, it means that there is a high chance that this is a reliable cup and handle chart pattern. I would like to apologize to NevMCC. I hope I'm pronouncing your name correctly. All right, because it took me a bit of time before I replied to you because of my activities on YouTube, on other channels. All right, so here we are. So at least today we are recording this video and that will be useful to you. So what do we have here? The financial instrument that we are analyzing. This is an Australian stock, CIMIC Group Limited. Is that a correct pronunciation? Okay, CIMIC Group Limited, EPIC CIM. So if you are using TC2000, you won't be able to see this. If you can see it on TC2000 trading software, let me know. I'm using today the TradingView trading software. All right, so here it is. CIMIC Group Limited, EPIC Charlie India Mike. The stock is listed on the Australian Stock Exchange. All right. So the current price that now at 33 Australian dollars 16. Here it is. All right. So what has happened so far? Is it too late now? It's never too late. It's never too late. All right. So you may think that you miss an excellent opportunity, but there are always other opportunities out there. So looking at this chart, cup and handle chart pattern is nicely formed. See, gently round it. So the cup and handle chart pattern is a balanced force. It's a balanced force between the bullish traders and the bearish traders. So first reaction is that people were selling from this point. So it reaches the deepest point, and then from there the bullish trader took it over. Now the bearish trader who showed it here will form the handle of the cup and handle. This is the handle here, the handle. And they will try to sell it again because what has happened before here is likely to happen again. So they sold it here, down to here. The bullish trader took it from here, bring it back to the same point. The bearish trader want to sell it again. Where do they want to bring it? They want to bring it back here. But what you need to understand is this. As they are trying to bring it back here, there is a midpoint target. Where is that midpoint target? It's here. So you will use the measuring stick of the cup and handle chart pattern, and then you divide it into two, or you apply Fibonacci retracement to it, and you highlight the 50% Fibonacci retracement level. So as the bearish trader who sold it here starts selling here, the midpoint target is here. So if you are somebody who want to buy, you want to look for an opportunity to buy at the target level. That's what you need to do. So as the bearish trader sold it there, they will stop at the 50% Fibonacci retracement of the depth of the cup. So this round here looks like a cup. You drink tea or coffee, it looks like a cup, isn't it? And this is the handle of your cup. Okay, so a cup has the handle, and here it is, the cup. So here, this is the entry point for the bullish trader that want to enter, okay, the cup and handle chart pattern. It's a nice setup because this is, in theory, that's what I taught to people, that your cup and handle will be formed like this, and you always come to the 50% Fibonacci retracement. It doesn't always come there. It doesn't. It can stop before that. It can go deeper than that, come to the moving at 50, but here it stops exactly at the 50% Fibonacci retracement of the depth of the cup. Everybody wants it that way. If the common settler Am I talking too much? Okay. If the common set trend line here is kaput, is broken. Now, and that candle see by, you see that candle see by this one. It's close. We highlight the high, the low, and the median line. So you can see that as the next candle see by did open, it tried to go down a little bit more, which is good, very good. This move down of this candle see by is good. Sometimes traders that are trading on the daily chart get into trouble, and sometimes people are taken out of the trade. They think that they made the wrong decision, but it's no. You want to understand what is good. Price going to go up. We will prefer it to come down first. And from there, they took it up. So if you buy here at the end of the handle of that cap, your ultimate target is the neckline of the cap. The neckline is the top of the cap. So this is the line here. The neckline is at $38.14. So if you buy here, your ultimate target is there. But again, there is a midpoint target. Always there are two targets. Always remember that always there are two targets. The reason why you need to work with the price target is because you allow you to add to your position and also to manage the risk and to know where you should take profit and where you should add to your profit, where you should secure your gain. So as it go, you bought it here, your midpoint target is here at $33.07. You see, it peels through, which is good, so you get paid more than you're expecting. You see this currency bar, the red one here, pull back. This is another point where you can enter the trade again, buy again, look for an opportunity to buy. I'm not saying that just buy, look for a trading setup, and then implement a different time frame trading method to trade it. For traders that are very new to the topic of a top-down trading method, go to www.stochastic-macd.com, stochastic-macd.com. At the home page, did I say home page? At the home page, place your cursor on the word more. You see a drop-down menu. Scroll down all the way to the at the bottom of the scroll down, the drop-down menu to find the top-down trading method web page, and spend your time your own time to watch 5 videos that will gradually in your own time. You don't have to watch everything one day. All right. You can decide to watch one video today, another video tomorrow, and then you take it and you come back to it many times until you understand what I meant by top-down trading method. So here it is. This is another entry point for you at the midpoint target. And then from there, you bought it again. If you are to position here, your ultimate target is now here at the neckline. Now, you can buy again above the neckline. What are you looking for? It's the same thing all the time. Break above retest or break below retest. That's what you're looking for. On the edge of a trend line, on the edge of an horizontal key level, and so on and so on. All right? On the edge of a channel, and so on. So here again, this is another entry point. This one. Once this one is closed, you can again implement a top-down trading method. So you say monthly chart, daily chart, hourly time frame for swing trading purposes. If you do not want to use the monthly chart, you use the signal of the monthly chart trading setup on the daily chart as your trading setup on the daily chart. Now, don't get confused. All right. And then from there, you can buy it. If you buy here, what is your ultimate target? Yes, there is another ultimate target. So the target for the cap and handle chart pattern, so I'm telling you how you trade the cap and handle chart pattern is one step at a time. So now you will use the depth from the neckline to the base of the cap and handle. You project it. All right, okay, now here we are. And then you project it above the neckline. All right, and that will give you, hold on please, I'm getting there. I'm getting used to the TC trading view now. So this is your new ultimate target. Your new ultimate target at $60.60. That's your new ultimate target for the cap. So most of the cap and handle chart pattern trader will tell you that the target is at $60.60. As I told you before, this is a clean cut cup-and-handle chart pattern. This is a clean cut because it pulled back exactly at the 50% Fibonacci retracement of the depth of the cup. Sometimes it may not do that. This is a good one. Now, if you buy here, or if you buy after this pullback here, this better pullback, so it ran away. This is what we call deviation from this one. He went too far though. He went too far. I'll explain to you why he went too far. He went too far. So he went too far. So some trader will buy after this pullback when the common set trend line is broken here. So common set trend line is broken. That candlestick bar is closed. Now implement a top-down trading method or use the TSTWS8008 trend system on the edge. You want to buy, you want to make sure you are buying at the key level. So this pullback here is retesting this high here. So I will give it a chance. If it was in the middle of nowhere, you will be very careful. So a pullback and the common set line is broken is not sufficient. Is he at the key level? Is he bringing the price to a key level where people are happy to buy, where the risk is low? All right. So those who bought it here or here, the ultimate target is at $60.60. That will be the end of the play with this cup-and-handle chart pattern. But again, there are always two targets, price target. One is here again, midpoint target at $49.40. Call it $50 zone. So that's where the price did stop here. So if I want to answer your question, Never MCC, thank you for asking an essential question. For the play, talking about trading game of the cup-and-handle chart pattern here, the price did stop at the midpoint target, couldn't go above it. It tried first time, second time, third time, and now everybody understands that for 3 times, it couldn't go above that level. People start selling it down. Is it too late to play it again? The pattern may look like it has failed for a while, but the trend can resume again unless, I'm choosing my word very carefully, unless there are fundamental reasons why the price should continue to go down. So what I'm saying here is that do not use the cup-and-handle chart pattern on its own as a purest technical trader. You want to investigate all the time, implement a different time frame trade. You want to perform Google Asset test, perform Google Asset test to a kind of a due diligence, a kind of fundamental analysis. Always, when you are dealing with a chart pattern trading, one must combine a technical analysis with a fundamental analysis. Otherwise, it's just a mumbo jumbo, pure speculation. All right. So the only reason why this cup-and-handle will return to zero, meaning that coming back all the way here, it will be for fundamental reason. But right now, where can we look for an opportunity to buy again using a different time frame trading method? The good news is here on the edge of this trend line. You have to draw it, connect this low of January 2009 to this low here of July 2016, and then you draw this trend line. So a lot of technical traders will want it to come to retest that trend line. And again, if the common straight trend line is broken, very important, that's the first condition, and the next candlestick bar is closed, the next candlestick bar that break is closed, and our hope is that the candlestick bar that is breaking the common straight trend line is not too long. If it's too long, we have to highlight the high, the low, and the median line of it. This one is a good one because it's short, so something like that would be good. Otherwise, if it's long, we have to highlight the high, the low, and the median line. And we will expect a kind of a pullback near the median line. Okay, so this is another zone where bullish traders will be watching the reaction of the price. If you do not want to wait for the monthly candlestick bar to close, which normally I would prefer that people wait for it to close, and you want to play with it, you have to go to the weekly chart, wait for the weekly candlestick bar to break the common set trend line before you start playing with the top-down trading method. Okay, so this is one point. But as things stand now, there are other traders who have missed the boat, because this is the best place to catch the cup and handle chart pattern, and to play it all the way up here, and then try to look for an opportunity to sell it again down here. That's why they play it. So those who miss that opportunity here at the midpoint target here of the 50% Fibonacci retracement of the depth of the cup and handle chart pattern, those who miss the boat here, if you are one of them, because your question was, is it too long for a reliable signal? Is it too late? All right, if I understand your question very well. So watch this zone. But the better place that most market participants that have missed the boat here, so to speak, they will prefer to come back to the zone of $26.52. It does not mean that when it comes to $26.52, definitely it will turn around there. But there is a high chance that there will be some buyers here. So this zone, and then here it is. All right. Again, if we come all the way to the $26.52, we do exactly the same thing that we did before. Midpoint target right there, ultimate target right there, and again breakable retest, and then we take it to the midpoint target, kind of a pullback or breakable retest the midpoint target, and then maybe one day it will come back here, but it will not go up. All right, if the fundamentals are not solid, as I said before, one must always combine the cup and handle chart pattern analysis with the fundamental analysis. It's critical. Otherwise, it's like trading the chart pattern like the old-fashioned trading. It doesn't work anymore. The market is now very, very sophisticated, and nobody get fooled. The hedge fund, they don't get fooled with the chart pattern trading alone. They always check the fundamental analysis. All right. So now, what is a little bit bearish about this is that, you see, draw this P-Fork tool on your chart. You see here, the price of this low here, same level, July 2016. There's a point there. That's the first point on my Pitchfork tool. The second point is somewhere in December 2017. And the third point is somewhere at June 2018. So with those 3 points, 1, 2, 3, we draw that Pitchfork tool, because the Pitchfork tool will determine for us the trajectory or the path or the route that the price is likely to take if the bullish momentum should continue. As you can see, as it came to the midpoint target here, it didn't continue. If it was about to hit the ultimate target, it should stay within the boundaries of this Pitchfork tool. It should stay in that. Now it come out of it. It's a kind of weakness here. All right. So now it's popping down. Watch this level. Will it come back here? Will it find a support? If it fails to find a support here, it means that fundamentally speaking, this thing is coming back to the starting point again. So check the fundamental. You to search the phrase Google acid test trading video. All right. You see 2 or 3 videos when you can see me speaking my beautiful, American accent. All right. Or let's say Australian accent. This to make you laugh a bit. Okay. All right. So this is what's going on here. So talking about the trajectory of the price. All right. Now we can apply this now. We apply another Pitchfork tool now, because it's going down. Where is he headed? Okay. So all in all, it's never too late. That's what I say to you. It's never too late. You may think that you miss another opportunity. You miss one opportunity, there will be another opportunity for sure. That's what I always say to traders. So I understand your question that normally this is a good place to enter, and another good place is somewhere above or somewhere here. Now it hit the midpoint target. Now it's coming back down. Is he going to restart it again? So place another P for 2 first point, second point, third point. Now it's going down. Here it is. Is it going to pop out? Is it going to find support there? Watch it. Draw your common central line, all right, along the price, and then implement a different time frame trading method, or use the TSCW XY008 trading system if you are a swing trader. So this we conclude our discussion today about cup and handle chart pattern trader explains his cup and handle chart pattern analysis. Always combine the chart pattern analysis with what? Fundamental analysis. We are recording this video today because a YouTuber of the name Nev MCC did ask me a few months ago, to look at this SMIC Group Limited, EPIC CIM, an Australian stock, whether is it too late for a reliable signal. So talking about reliable signal, we must first have a reliable trading setup. All right, reliable trading setup, copy 100 chart pattern. Reliable copy 100 chart pattern will be our trading setup. Will generate various reliable trading setup. At a specific key level, as I told you here. One zone here, another zone here, another zone here, and until we reach the ultimate target. If you have any question or suggestion, please put in the comment section, and of course, I will be recording another video to answer your specific question. If this video has been truly useful to you, please let us know by giving us the thumbs up, all right? If you think that this is another blah, 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 please mark it down. However, if you think this is an essential tutorial, feel free to share with your friends on the social media. Subscribe to our YouTube channel. Our YouTube channel is George Trio YouTube channel. Be sure to click on the notification bell, so anytime we record a new video, you will be the first person to be notified. To learn more about the copy handle chart pattern trading, go to www.stochastic-macd. At the home page, have I said home page? Place your cursor on the word more. In the drop down menu, scroll down until you see the copy handle chart pattern. Familiarize yourself with the theory and all the various types of copy handle chart pattern that you can come across, so you may learn to master the pattern very well. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about copy handle chart pattern. Trader explain his copy handle chart pattern analysis. The financial instrument that we are analyzing today is an Australian stock, SMIC Group Limited, EPIC Charlie India Mike. Happy trading to you all, and I will speak to you soon. Thank you for watching.